analyst or a technical analyst, there's certain like rules of thumb. So like retesting the wick off breakout, and then, you know, you're going to have a coil, it's going to spring your accumulation phase, and then boom, breakout, and then retest the breakout. Well, you know, Bitcoin breaks new all-time high, so it broke like 1,300, and then it never went back down to 1,300, or like 1,170 on Finex. So like those people that had limit orders ready to buy the retest of the breakout, they never got filled, and instead Bitcoin went up to 20,000, and then down to 3,300, and then back up to 60,000. And those fucking people that have limit orders sitting at 1170, they're just still sitting there, never filled for years, and the market just left them behind. Now 1170 into 62K, and on the futures it's higher, and you can sell the futures price because you know you could fill it with your spot. So you really could be selling at like 64K at the top. It might have. So like let's say 64K over 1170. That's a 54x return you missed out on because you tried to time the market and rebuy at 1170 to rebuy the breakout retest. So the market just can leave you behind and leave you behind forever, and you'll never get filled. Like you see that in the S&P chart, you see the Amazon chart, you see the Facebook chart. HEX is more volatile, so the chance that you could get filled, maybe it's higher, but like maybe it's not, because of 352x, like even Amazon might not be up. I mean, it might take Amazon like a decade to do that returns. So the fact that you could be left behind by HEX, just never get filled. Like I'm looking at the dollar chart right now. So the God whale, the first time I saw God whale buy, he doubled the price in a candle. The price was like 3075, and he brought it up to like 0015, and now we're at like almost 10x higher than that now. And the price never went back down to the level he bought at. So like when the first God whale doubled the price, it never actually went down to the level that he had doubled it to. So he doubled the price, and it never ever retested that breakout again. I mean, it never retested the top of the candle, let alone the fucking breakout. I mean, the fucking breakout was like 3 zeros with a 6, and now we're at 1 0 with a 1. Well, it's like 100x. Like, well, I mean, I can just measure it actually. So right now the price is 20x higher than the breakout that never got retested. So like, you just get left behind, and the market can never come back to you, and you'll just be pissed off all the time talking about how crypto sucks and shit because you sold too early, you know?
What hurts more, like losing the principal or missing out on the possible gains?
I mean, for me, I'm in this for glory. Like, my quality of life isn't changing, so it's like I care about the gains number because that's the only way I know I'm winning.
Richard, I heard about the new network, about 80 nodes. Is that a fixed number, or is there a limit on how many you would want to run? And then to be a node operator, is there a minimum amount of shares in mind right now that you guys would have in mind?
I kind of pulled that number out of my ass. The more nodes you have, the less throughput you're going to have because you spend time rotating. And there might be some other consensus issues around the maximum number of nodes. I haven't dug that deep into that particular part of the deal yet. You just need enough so that you're censorship resistant, and then any more than that is waste, kind of. So, like we've seen, EOS has had no problems with 21 validators, and their shit works fine. So you know the number of nodes you actually need to be censorship resistant it's probably low. And by the way, like node number isn't the primary thing. It's like node number and location and honesty of the person operating it and things like that. I mean, off the top of my head, I think the best way to do it would be like whoever holds the most of the native coin gets to win the block or gets to win more time in rotation than a person that has less, and then you just end up with like the people that have the most invested have the right or ability to be the people that benefit from being able to mine blocks, because those are the people less likely to fuck around. So the more, it's just what we do in Bitcoin, right? Like the more hash rate you have, the more of the block reward you get. And so if you look at proof of stake system, well, the more stake you have, which is like the same thing as having more hash rate, it could cost you more money. Well, then the more reward you should have. Because it'd be kind of upside down world if someone that spent less got more reward. Like that shit wouldn't make any sense. So I have to see, like, you have to get into the specifics of like, well, what system is doing the timing of the rotations, and how often does it get updated? And, you know, you have to make sure no one can game that system with timing attacks and shit. I mean, a lot of this stuff is just like, you're not getting attacks from this vector really anyway. It's just like 51% attack. If you want to make money on 51% attack, you got to buy the coin first. So let's say for fun that HEX forked to something stupid like a minority proof of work shit, like Ethereum Classic or something that gets 51% attack all the time. How do you make money on a 51% attack? They got to buy the HEX, sell the HEX on exchange, roll back the chain, and then sell the HEX on an exchange again, and hope the exchanges don't catch on, and hope you're like, and then they had to push the price up to buy the HEX in the first place to hope to sell it back down, and they're going to have slippage along the way, and you're just like, man, so in order to make money fucking the network over, you have to buy the coin? Seems a little risky. What if they buy the coin and someone else dumps on their ass first, and then they're like, oh shit, well, you know. So like if they 51% attack and then double spend, that only makes up for like a 50% price drop with their 2x return from double spending. So like the mechanics of like how you'd actually try and profit on a 51% attack make them a lot rarer. Like once you understand how bad it is to try and run a 51% attack, like how you could fucking lose on the deal, then you realize like why there's so few of them.
While we're on that topic, what do you see as sort of the biggest risk to HEX?
I mean, mostly stupid questions in chat. Like, it could destroy the whole system. If people ask a stupid enough question, everyone could just decide to kill themselves rather than continue to exist on Earth. I'm just drawing a little bit there. I hate questions of this form. It's like you walk into a store and the guy's like, "Hey, what's the most you'll pay for this?" You're like, "Suck my dick."
So with what you're saying about
I'm new to HEX, so I don't know that much about it.
I mean, if like, to answer your question seriously, a solar flare destroying all electronics on Earth would suck. Pandemic virus that actually killed everybody would suck. Nukes, zombies, spontaneous combustion. The kid that's running, the alien child whose Game Boy we're actually existing in as a simulation, if he turns off his Game Boy, these are all problems.
Richard, how do you see the next? Like, go ahead, man.
My apologies. Quick question, Richard. Are you willing to have discussions or debates with the people that were naysayers in the beginning, that slandered, called scam, and just shit talk? Are you willing to like debate with those naysayers again?
It doesn't matter what I'm willing to do because they're not going to do it. I mean, no one's going to be like, yeah, look how stupid I was. Let me hop on and get my ass kicked for another hour by the fucking debate king. Like, shit's not going to happen.
Yeah, it would be amazing because, like, remember how he destroyed Peter McCormack when he said, "Bring your heroes here to die." And like, I love that like so much. I'm sorry.
I wrecked that motherfucker, and I was right and he was wrong. So his little centralized bullshit that he advertised, getting people's private keys out of their hands, fucking rug pulled people. So he made money on scams because he is a fucking scumbag.
And now they're just too scared anyway.
Yeah, it's hilarious. Like the people out there advertising shit that gets people wrecked is almost everybody. It's disgusting. Like, even if you think about like what Uniswap is, right? Uniswap, cool invention. I like it, but look what it actually is. It's getting people to trade, and what happens when people trade? They lose. And what are they trading for? Shit that sucks. And you're like, wow. So in reality, even the stuff that is considered like good and useful, it usually gets people to not delay gratification, to have worse outcomes, to like get worse results. Like all of the stuff that crypto has adoption for is basically getting people wrecked. It's like, oh, trading, lots of adoption. Yeah, but trading for what? You know, like there's a very limited range of things we need. We need new users. We need efficient things with low overhead, you know, and we need anonymity, and we need throughput. And then where on that list is like half of the bullshit that people come up with? They're just a lot of things that people don't need and probably shouldn't interact with.
Facts. It's a lot of over trading, a lot of narrative, a lot of bullshit, and they're just doing schemes on schemes because they don't know how to actually create a business. That's the sad part. And then people get wrecked and lose their life savings.
Yeah, every day somebody's losing all their money, and you're like, if you were just okay with like thousands of X return in a year, you wouldn't have got lost all your money trying to get like a 2X that. Like you make enough gains in spot to not take on leverage to get liquidated in a scam wick, or it's just crazy.
That's true. I mean, just the last 2 days, 2.5 billion liquidation. I mean, it's just disgusting. I mean, just looking at that, it's like.
Yeah, so in crypto, the people who get rich are holders and founders, and in general, founders of exchanges, and slightly like exchange founders make more than coin founders. So exchange founders get people wrecked, make the most. Like the guys that the BitMEX founders made more money than Satoshi. The Coinbase founders made more money than Satoshi.
Apologies if you've already answered this, Richard. Has there been any update with regards to the Lex Friedman interview and when that might be taking place?
He wants to see me in person, and I'd rather hire developers. So, hiring developers and getting the Ethereum fork up is so. Right now, like Hexicans are spending $15,000 a day on gas, about 2/3 of which is about 1/3 of which, or maybe 25%. We'll call it a quarter. 25% of Hex gas fees is through people using Uniswap. So, the prices for the people not using Uniswap, for the people that are like ending stakes, those are going up 2.6x or 2.7x in 2.5 weeks because of Vitalik's just raising the gas costs. So the cost, the cost to load data from disk used to be 200 Gwei, and then they 4x'd it to 800, and now they're 3xing it from 800 to 2100.
Quick question.
I thought that's the S load, right?
Yeah, the S load. Yeah. So it's instead of so right now Hexicans are spending like $25,000 a day, and then after this change, or sorry, $15,000 a day now, and then after these changes, they're probably going to be spending $25,000 a day. It's like $5 million a year just to give miners to dump the ETH price. Like, it all sucks. Like.
Yeah, I feel like they got bullied by the miners. Kind of make a compromise, like, hey, here's your little handout. So you're now trying to fork the chain, but then we get the short end of the stick, which is kind of bullshit. But I thought they were doing that when the Uniswap thing.
There's technical reasons why they're raising the S load costs, but great. Like, you've got good reasons to fuck us over. I'm glad that you have good reasons to fuck us over, but we don't need to be getting fucked. Like, we're just gonna go do our own thing. Like. We keep doing,
True. Go ahead, ask your question. Somebody had a question.
Fellow, I think.
Oh yeah, sorry about that. No, I was asking. I was like, so Ethereum, the gas prices are controlled by them. Like, they're the ones that increase gas prices, or is that something that happens?
So there's like. If the price of gas goes up at the oil field, then it goes up at the refinery, then it goes up at the gas station, then you pay more. And any one of those guys can move the price up against you. So the refinery could charge more, the gas station could charge more, the oil producer could charge more, the transport company could charge more. And in the case of Ethereum gas, there's a finite amount of space on each block, and they decide which functions cost what. So addition costs this, division costs this, writing to disk costs this. I think writing and reading cost the same, which actually is a little bit silly because most disks don't work that way, so that probably shouldn't even be the case. And so every function that you want to run in the virtual machine has a cost associated with it. And then those costs total up to your total gas usage, and then that gets multiplied by the gas price. And then that's your real cost. But if you want to be specific, that gets multiplied by the USD to give you like your USD value. Now, you're not paying in USD, but like for you, a human that has the global numeraire of the dollar, it's the functions that you're running add up to your gas cost times the gas price equals your cost in Ethereum, and then your Ethereum price times USD is your real cost that people really care about. And so if ETH price goes up, you're paying more. If the functions that you need to call got more expensive, you're paying more. If the price people are bidding to get into a block goes up, you're paying more. So either three of those parties can raise the price against you. And in this case, we're getting kind of, they all multiply by each other. In a bull run. In a bear run, like, so this shit ain't ever going to get a little cheaper. Like, once the S-Lid gets raised in price, it ain't coming down, is my feeling. But, a bear market could lower the ETH price, and it could also lower the gas price.
That would be ideal. That wouldn't be ideal at all. But question, so with HEX and ETH 2.0 coming out, like what's the essentially what happens with HEX and what happens with with the addition of like ETH 2.0 and the going to like proof of stake? How does that impact HEX?
Well, you can never stop or pause or edit or anything HEX. It is what it is, and it will always be. I mean, I think you run into a buffer overflow at 150 years, and that exceeds any human's lifespan. So, we're good for your life. So, like, if there's forks, you're going to have a HEX on a different chain. If everyone moves from ETH1 to ETH2, I doubt they're actually going to shut off all the ETH1 nets, and so you're probably going to have HEX on another chain. It's just how it is. So, and then what matters is what are people valuing that chain's HEX worth, and where are people willing to participate? And if you have the majority of participation, the majority of liquidity, the majority of market price action, and perhaps even development on another chain, then I would imagine the market would value that HEX on that chain higher.
Hi, Richard. What do you say is the biggest challenges technically at the moment to creating a new chain?
Bro, software is really hard. Every part of it's hard. So you're like, oh, okay, well, we need new GitLab repo. Oh, we need new Docker so everyone doesn't have to fight dependency hell. Everyone's got to, fill out these contracts. Okay, now what's the tech stack? Are we going to use Kubernetes? It's going to be Docker. It's going to be Amazon's version of that. Is it going to be, what encapsulation are we going to use to like virtualize the developer environment? Oh, we got that done. Okay, how about there's so many different things that run Solidity. You're like, is it which of these Solidity things it's going to be? So I've got a lot of these design decisions like figured out, but some of them they're not figured out yet. So I mean, basically, everything is hard, and then you're like, all right, well, needs a website, needs a logo, needs a lot of different shit. Like, so you got all your social, you got to roll out, you got all your design decisions on the tech side, and then you want people to be able to interact with your new chain. Okay, well, does it have an Infura? No. All right, well, you need to build a distributed Infura as well, which is like so developers don't want to run their own nodes. They just want to use somebody else's API. It makes life easier. And so what is an API? It's just a link to somebody else's server. Somebody else will run the server. And so if you make a new chain, well, now someone's got to run these servers that make it easy for developers. So you need an Infura replacement, you need a block explorer, you need the chain consensus network itself. There's a lot of shit, man. You have to do kind of all of them. Like, you could skip the chain explorer and the Infura, but probably better not to if you really want to punch hard.
Yeah, don't. Yeah, I listened to one of your interviews the other day, Richard, a couple nights ago, and I teach cybersecurity and cyber warfare at the community college level right now, but I'm a retired Army Lieutenant Colonel cyber officer, and when I taught cyber warfare a couple years back, I was actually explaining how I saw blockchain capability as a new technological place to look at for security. And so in the second time I taught the class, I actually taught them how to build a blockchain from Genesis block to explain how security goes into the block structure and whatnot. And that was back in 2017. So just listening to you talk and hearing the things you have to say is great.
Nice, man. Yeah, I mean, blockchains are interesting. It's the world's most expensive, slowest, least performative database that has one good feature, which is censorship resistance. And it's a really good feature. It's really valuable. But holy shit, it's so bad to develop on. Like, people don't understand how shitty it is to develop on top of a blockchain. Let me tell you how shitty it is. Okay, you've got 13-second blocks on Ethereum. What happens? Someone mines a block, it's valid, and then someone else mines another valid block right after him, 2 seconds later. Okay, well, which one's the right one? You don't know. You actually don't know. And so you have to wait until the network reaches emergent consensus. And then the guy that gets fucked, he gets an orphaned block reward. It's called an uncle in Ethereum. And then, so he gets like a partial reward. And then the guy who becomes authoritative, the real block that really happened, then that guy gets like the full reward. Well, that means that at the edge of the system consensus, you have a gray zone where you don't actually know which version of reality is the real one, because different miners will include different transactions in different orders in their blocks. So as a developer, you're like, oh, blockchain, it's perfect, it's immutable, I never have to worry about anything. And then you actually build on it, and you're like, wait a second, it's totally random and changing within this short time frame that users are looking. And then, so like, it's a normal database is never going to fucking change the system state on you within a few seconds of like a transaction. It just is what it is. But in the blockchain, you don't know what the actual system state is. And then you have like hidden bit rot. So let's say that you ended up on a fork and all of the old like transactions that happened just kind of disappeared. How would you know? How would you know whether you were on the real fork or not? You have to use your own computer to monitor the blockchain to even verify that what you tried to write to the blockchain actually got written. So like, you can't actually do computing just in the blockchain. You have to run your own oracles that watch the blockchain to make sure that what you tried to do actually happened. It sucks. It really sucks balls to develop on. It's terrible, but it's the price you pay for the censorship resistance.
That is some great knowledge right there. Thanks.
Yeah, you're like, I want to write to disk. Okay, well, it's going to cost this, and then you pay that, and then they're like, yeah, it didn't get in. But why not? Your block got orphaned. Okay, I guess I want to write to disk again. Okay, but now the gas costs more. Fuck. All right, I want to write to disk again, and please pay more. And then you're like, yeah, it worked. And then you wait, and you wait, and then someone reorganizes the chain, and your shit disappears again. And no one tells you, no one notifies you that your shit just disappeared. This isn't a good problem on chains that have high hash rate, like Bitcoin and Ethereum, but on other chains, like say Verge had like a multi-month reorg where someone just rewrote the history of the chain for like a few months. Oops. You're fucking blown out, like you're wrecked. So yeah, like no one understands how shit the blockchain is until you actually have to build on it. It's really a nightmare.
Richard, in between the time that HEX was completed, went from project to product, and the time when gas fees just started to become a real pain in the ass, did you have in that space of time like ideas for, not that you can see the future, but it's like if this keeps going in the direction it's going from the months from the weeks from then till now, like has it been an opportunity where you've like, oh, I've seen like a dozen ways to just fix this shit and make it so much better. Now it's almost like the shit that they've done or the problems that came from that was like a blessing in disguise somehow, like an opportunity. Because I one of the streams you had recently, you said, without giving too much away, that people, I think somebody asked about an airdrop or something, and you're like, well, it might be something similar but different but better. Like just like those little fun ideas for you, knowing how to build things. Was it like will be something that was destined to happen to improve upon? Like,
I mean, it would be. It just is an interesting idea. I wonder what it would have been like if you couldn't emergency end stake during launch phase. I think that fucking would have like done even crazier, more awesome shit. So that's an interesting like idea. You're just like, yeah, buy only, no sell. That's an interesting idea. And then
yeah, it is. That would have been like a forced holding for a period of time.
Sure. And this is what this is common in the finance world, like cliffs investing.
Well, yeah, like when you have like surrender fees in an insurance policy or something in the first couple of years.
Yeah. I mean, the nice thing in HEX is like it let scumbags drop off the shit talking little scumbags that trader boy, art boy, fucking buy a bag, say nice things, sell their bag, and become assholes and demonize like those fucks. They made less because they sold early, So it's nice that those guys made less. But if you're just looking at the perspective of the price chart, if no one can sell, that's an interesting mechanic. I think the other thing that would have been neat would be if someone free claimed, it reduced the available supply that day, and the way it worked in HEX is that reduced the available supply averaged over the remaining days, and so you just wouldn't get an immediate dopamine hit from watching a big free claim reduce that day's available HEX. I would have greatly preferred that. But that's it. There's only two things that I could think of.
Well, I'm thankful for the extra coin, that's for sure.
Yeah, let the haters go out.
I thank all the Bitcoin holders that didn't claim. I thank them very, very much.
Can you imagine how stupid they must feel? Like I guess they're too dumb to have the humility to understand that they fucked up, but like 300,000 Bitcoin, which is what, like $18 billion or something. They claimed their free fucking HEX, they were smart. And then all these other people that could have had free money, could be generating yield, risk, like no counterparty risk. It just does so much shit Bitcoin can't do. It's faster, it's cheaper, it's more secure, it has more features, it has better logo, it has better community. And they're just too dumb to get it. Like they're just immune to...
Yeah, I haven't had a chance to get to my staking yet because I'm stuck with some financial things that are going on. But in my professional world, and in the last like 72 hours, I swear to God, I've talked to 20-something people when the cryptocurrency topic has come up, and I'm like, this is what you guys need to be looking at, because everybody's constantly asking me, what do you think is the next thing or the best thing or a good thing? And I'm like, if you get down these staking ladders and you get this concept of freaking punting out past 15, it was just crazy. I've only been dealing with your stuff for like 4 days, it seems like, but it's like been a lifetime of education with Kareem and you and everybody else in like those last 4 days.
Yeah, another thing that I love is the share price chart, because the share price chart reflects to some degree the gains people are making through the interest. So when you look at the price chart isn't actually fair to how much money people are making in HEX. If people look at this price, like right now we're at like 1.5 cents. Well, actually, hold on. Right now we're at 1.4 cents. So, but that's after people got a minimum 30% payout. You're being staked a single day for big payday, which was only 4 months ago. So 4 months ago, everybody got a 30% payout on the day. If you were a long staker, you got a 100% payout on the day. So actually, to stakers, the price right now is 30% higher because they have 30% more coins because they made that interest for being staked one day for big payday. So this price chart says 1.4 cents, but to a staker, their like value is 1.4 times 1.3. That doesn't even include their basic interest. It's like 1.8 cents right now.
And if you're a 555 crew member, we're at 2.8 because we just got double stash, baby.
Even more, actually. Look.
Oh, yeah, and if you exclude the emergency end stake, if you factor that in, we're like 150%. Because there was massive EES right after big payday, too. It was just crazy. I remember there was a day, like, it was like 200,000 HEX. I was just like, stupid.
Yeah. So, I mean, that's the other thing is, like, as people make, so the average, I mean, if you looked at that Economist ad, the average, like, payout, I think, was like 39%, maybe. Let me look at that real quick. See what's written on it.
While you're looking that up, I got a quick question. So wait, what you're saying is, had I did a 5555 stake, or at least 10 years before big payday, I would have kept all the coins that I was going to get on big payday. I was going to get 100% of that because I remember it took a dip and then it went down.
Well, you would if you were staked for big payday for one day, you got a 30%, 1.3x your stack. You got 30% for just that day, for being staked that one day. If you had a 15-year stake, then you got 60%.
I fucked up.
Actually, even a 10-year stake.
No.
I mean,
it depends on your staking average. Okay, so if, for example, you had a whole Dream account where everything's maxed out, you get a full stack. You get like just doubles because it's based on your average because you may have a long stake, a short stake, a medium stake. So the system will just kind of average it up.
3641 days, about 10 years is when you would have got it.
Exactly. So let's say if your staking average is like 13 years, then you get full stack. So it just depends on what your average is. So because a lot of people have their whole ladder with a different stake, so every stake had a different big payday. But look at it based on your average. What your average year length is, that will tell you what your percentage is. But minimum is 30%, and depending if you have a 3-year, 4-year average, then maybe you got like 45, 50%. If you're like 8-9 years, you got maybe 75, 80%. And if you're more than 10 on the average, on the entire stack, that's the key, the entire stack, then you got double.
Copy, thanks.
I mean, this is like ancient history because big payday's over. It only happened once. So, and my point is just like the interest gains that people are making in HEX, which are pretty fabulous, they are not reflected in the price chart. I mean, if anything, it actually pushes the price chart down a bit. Like, so it's, if one day people have enough larger stakes that it pushes the ROI down in HEX terms, it's just going to shift it over to the USD chart. Because now people have less coins to dump because they're getting less coins from staking. So then it's kind of neat that the system, if people are getting paid less APY on the HEX side, then there's less coins to sell, then you would expect there to be appreciation on the USD side.
Yeah, and for everybody listening, this is what we talk about when we talk about bond math. That's what Richard is talking about. And actually, in money daily interest, you actually get paid more. So, example, if you're getting, let's say, $100 a day on the 39 APY, and then APY goes down to 25% because a lot of people stake. But let's say if during the same time the price did a 10x, now, yes, maybe you get let's say you got half the APY, so you thought you were only getting $50 a day, but then the price did a 10x move. So then you got to add a zero to that. So actually, your daily payout went up 5x. It went from $100 a day to $500 a day because the bond math helped you. And this is what we're starting to see. And then it creates the psychology of like price becomes more expensive, HEX becomes more rare because T-share becomes more expensive, so more people stake because they want to keep that. And then next thing you know, overnight, it's like drought, no more HEX. And then we moon like fucking crazy, and people be like, what the hell just happened? I can't wait to see the market cap. It's going to be hilarious.
Yeah, the majority of gains in any cryptographic currency come from appreciation. And the appreciation comes from new users. And the returns that you get by either being a miner or a staker or whatever inflationary method they pale in comparison to what you can make on the USD appreciation side. So even if you were making 100% a year, or 200% a year, or 300% a year, or 400% a year interest, that ain't shit compared to 35,000% we did in USD appreciation. It's just the USD appreciation side it's where the absolutely insane returns come from.
Yep.
And I guess you're actually kind of multiplying insane times insane, because like 40% APY on its own is insane, let alone multiplying that times the 350x. Like, I mean, right now even, yep. I don't think we're at 350 right now, but we're at maybe like 200x right now or something. Let me go look.
Yeah, it's about to go even way faster because you picked from the all-time low, so it's gonna be catching right back up to that 35,000%. And also the daily payout actually doubled because yes, we're getting 5.8 per T-share, but price almost 100% since what 2-3 weeks. So technically, your payout just basically double.
Yeah, I think we're at like 250x right now.
Yeah, it's 267x, Rich.
Nice, man. Thank you for calling that. I mean, 267x before interest. It's not that bad.
Yeah. By the time we get back to 2 cents, it will be at 350 plus.
Yeah, and and then I like to update my usernames to fucking shove it in everyone's faces. Like, hey, you guys
I'll be right there to retweet it.
Yeah, you guys were all talking shit. You thought you were smart. Nah, not smart. Look at this. That's it. Like, when everything else dumps and HEX flies, I'm just like, yeah, it's built better. What's up? You guys are all like, oh, we're gonna buy different coins. It's like, diversify. You're not diversified. They all move up and down together. Come on, that ain't diversified. Diversified is HEX.
Yeah. And they just got murdered even more because they diversify on the red day when everything averaged 10% down. So now your risk actually just multiplied for all those diversification, and you just got wrecked left and right.
Yeah, man, I'm excited about HEX. There's just so much potential, man. There's so much opportunity. Hey, what if CoinMarketCap actually stops fucking us and puts us to a blog? What if CoinGecko does? What if, we have this on-ramp for stock homies where they can buy HEX and they're like...
Oh, they're going to have to. The peer pressure is coming.
Really they're going to have to get that much traffic?
CoinMarketCap sold for $800 million to Binance. So you can imagine what type of traffic you would want to see in order to pay $800 million or something.
And they only just got lucky, like kind of Binance back in the day because they were the first, and then we popularized them to some degree. So that's why they were, they sell their soul instead of like, hey, why don't we just help people instead of getting them wrecked? But it's just a matter of time.
Honestly, I think it's a matter of time till you find some dirt on CZ. Something's gonna surface on him sooner.
Well, the thing is, like, CZ is never the guy that actually fucked us. CoinMarketCap was fucking us long before CZ ever acquired that company. So, I mean, we don't want to. I'm sure everyone can do their own evil shit on their own without like us cross-pollinating their evil.
Yeah, but this community has tagged him, mentioned HEX in front of him, been in front of vote sequences in front of him. He may not have stopped you. He may not have personally gatekept you, but he sure as hell didn't contribute.
Hey, look, if we're going over the list of people that ain't such nice shit about HEX, it's a long-ass list, So,
Just wait until we get full-blown bear market. It's going to be epic. Well, that's similar to HEX.
I really feel like HEX could do fabulous during a bear market.
Absolutely. And this is when the narrative will shift, because CZ is going to be forced, because this is how psychology goes. When the user gets wrecked and they lose all their money, now they got to play the blaming game. Why did I lose my money? And then they're going to actually start reading the post, because now you're too broke because you lost it all. You're not going to be out there margin trading. And then you're going to do the research about how you got screwed. And then you're going to find out what's really going on. And next thing you know, it's like, oh shit, you better list that stuff.
And at the same time, all the whales that are dumping right now are going to be gone by that time. It's going to be perfect. It's just a perfect storm of a combination of everything. So.
Absolutely.
That's a funny thing. Like when I see HEX price go down, I'm like, in my brain, I'm like, man, if y'all would stop selling, the price would go up. And we're on-ramping new users all the time. The shit's getting better all the time, except for the gas fees, which is outside our control. And even in that case, we're extremely gas optimized. Can you imagine how all the other things on Ethereum are doing? They're getting fucking super duper annihilated.
Facts. But Richard, what's our hidden bullish diversion is like price kind of go down, but staking average, length average goes up. And then as soon as that's my bullish diversion. Yeah. We're buying the whole fucking thing, and we just 5 that junk. And it's going to get to a point where you just run out of ammo, and then we just leave you behind. And we're not selling for 10, 15 years. The next thing you know, it's just fucking 100x. That's how bullish diversion.
I used to tweet HEX is so baller. It's got 4.68 average.
We're like a 5.3 right now, I think.
Yeah, it's up
what?
10 or 20% or some shit.
Yeah, boy. 5.3, and it's moving fucking fast. After that billion plus leads.
And this is with April. The OA address, daughter addresses. They're not that's retail. That's fucking normal average people have chosen to stake for long as fuck. That's so good.
Shout out to all of you guys out there, Hexicans, and paying attention and learning. That's good.
Hey, Kieran, I've got a question for you. Kieran, hi. How you doing, guys?
Good, go ahead.
Yeah. Speaking from Bangkok. I'm just looking. I just want to cement this into my head. I'm just looking at one of my stakes I did on day 27. I'm not going to say when it ends, but it's over 3,000 days. I see the progress at 30%, and I see my APY on 61.83% with a principal of 2 million. Okay, that was at day 27. So 13%, which is obviously the progress till the end of that stake. Yeah. So 61.83%. So that's quite. That's way above the average that 40% APY that we're expecting. Or does that decrease when more people come into stake? Is that
no? You're correct. What you're missing is this: the 39-40% is what we call the global stat. It's for the whole entire system. Brand new Hexagon comes in, pays on share rate, and then you do a max stake. That's what he's going to get. What you're having right now is you're experiencing the power of longer pays better. Because back then, when you locked that in, not only you're locked in for longer, which gave you the bonus shares, which is why your APY is so high, but also you're locked in the share rate of back then, which day 27, just off my head, were definitely below 11,000 hex per T-share. So you lock that up, plus you lock the bonus. And this is why I tell people to really understand. Share rate is very moving fast because they're doing the math wrong. When the share rate goes up 10%, when we're about to reach 18,000 hex per T-share, it's not just a 10% increase. It's a 30% increase. Because if you think like me, 555, you're locking something that do 3x bonus. So if I can get something at 10% less in share rate, and then I get a 3x multiplier, it's a 30% value. This is the reason why you start to see the separation. Your 61% that you're having right now can never be recreated because share rate already left behind. The max anybody can do 555 right now will be about that 40%, which is also why you need to think twice. If you, whoever's listening, trying to do an emergency end state, you might think you're making a lot of money, but that APY, 15 years from now, the money that can generate, it's insane. And this is how the people are 10, 15 years from now at the end of the curve, the daily payout is just going to be something absurd. You might end up having a triple-digit APY looking at it on that particular state, while the global stats probably doing, 25% or below, simply because you are locking that T-share. And this is why T-share is so important. That's why I call it T-share preservation. That's why the Godwell can stake $1 billion HEX, because what he's doing is locking the T-share. So that 15 years from now, imagine that.
So look at it like this. Imagine one, if there was a system that forced you to hold your Bitcoin for 10 years.
Exactly.
Enjoy your 6 million X. 2, not only would you have gotten the 6 million X, but imagine there was another game mechanic that made it so that you got to mine most of the new hacks and no one else could afford to compete with you. That's what T-shares are. T-shares are like you're the only fucking Bitcoin miner now. It's
insane.
It's really good fucking design. It's a really good design.
Kudos to you. Richard, you gotta get that Nobel Prize, I'm telling you. Guys, and this is when
2 Nobel Prizes.
Yeah, and I said T-share is gonna be more valuable than the Bitcoin. And this is exactly it's so rare that the longest time you can hold it is 15 years. Just let that sink in. Whether you like it or not, you cannot hold it more than 15 years. That's how rare it is.
But it's really interesting.
It's going to be a lot higher.
Exactly. So that T-share is like an NFT in a way. It's so unique because it's only 15 years and then it's gone. That's how valuable it is.
It's really interesting how this motherfucking thing works. It's a genius. I'm just looking. I don't look at my charts very often. But I'm just like, my goodness. It's just like, fuck's sake, man. Where's this coming from? Richard, I hate you.
Well, it's okay, man, because it's gonna get more addictive. Like we'll get more streamers. We'll get fucking. It's
gonna 10x with the price.
I've been there since Bitcoin was when it started. Like I was there for the beginning of Bitcoin, and we're doing so much better now than Bitcoin did then. It's just no fucking comparison.
Facts. Technically speaking, Bitcoin didn't get its first transaction until 500 plus days, so technically it's dead compared to us.
It's not even, it's not a fair comparison. It's just not.
And then,
do you guys see institutional investors kind of coming in and adopting it in the near future?
No, facts.
I don't know what, I don't keep an eye on what those guys do really, because I just don't give a fuck about what they do.
Yeah,
what does a VC do? A VC buys in cheap early and then dumps on everyone's heads later. I'm okay if a VC buys the fucking top. If Elon wants to come and buy Bitcoin at like 50K and I bought it at 30, that's fine. Buy it, homie. Good shit. I see you on the dip, bro. So it's I don't really give a fuck what VCs are buying at all.
That's true. Honestly, personally,
I care about retail's buying.
Exactly. And if we do that organic, it's going to be more cementing the foundation, for HEX. And I think it's best to focus on those people because they are bringing kind of their retirement account in a way. They're not just like, hey, how can I just dump on people and create a scheme, right? So a lot of small retail investor coming in are going to have stronger hands than one VC that just, hey, I hit my price point. Let me just dump the whole thing. So I think
VCs buy the wrong shit all the time. Dude that started broadcast.com, owns the Mavericks or whatever.
Mark Cuban.
Yeah, Cuban, yeah.
Thanks. Yeah. He buys shit that just goes to zero. Like wax, fucking just random. Yeah, just shit that just goes to zero. He buys this shit. So just because the dude's a VC doesn't mean he actually knows what the fuck is valuable.
They're very wasteful. Their strategy is 1 out of 10. That's fucking wasteful.
Yeah.
You should see Cuban's NFT wall. It's pretty bad.
He loves Harvey. I'm not taking advice from you,
Now Gary Vee is doing the same. It's kind of sad, but it is what it is.
Someday Mark Cuban will find HEX and he'll probably go ape in and he'll invest $50 million. Who knows?
It might happen.
Yeah, we'll let him do that 50 cents or $1 so the HEX can get some of that payday. It's better to have a bigger wallet like that at high entry point, because for them to dump, right, quote unquote, they have to wait for a higher point. So that way, kind of like how Godwell comes in, and then like Richard said, the price never goes back down below his entry point, because he just stacked his fat ass and it's that, you know what I mean? It's like sea level goes up, you know what I mean? So that creates a price protection, because if you truly understand HEX and you're below your you're above your entry point, you just leave off the interest and just go fucking have a great life. You know what I mean? Like just that value alone, having to stare at a screen all day, will actually meet people, stream, have fun, get your freedom, get your own fuck your money, meaning like you can do whatever you want, whenever you want, with whoever you want. Just that freedom. I mean, that's it. That's what I told my friend all the time. Like, I make people, oh, Kareem, you got big dreams. I say, dude, the dream is related to what you want to do. Get your fuck your money, and then that gratitude you're gonna have. Shit, anytime somebody talks shit about HEX, you're gonna be out there punching that person almost, be like, yo, because you know what he did for you. And honestly, that's the best way. And that's what those assholes, they can't comprehend, because they're just used to skimming and lying and cheating and let me run this direction, because that's all they know how to do. They know how to organically build something that's great for a community, where it's not like a zero-sum game or like win-lose, like, hey, let me scam you out of your money. Like, no, find something where everybody wins. We got different time preference. Just that alone is a win. Like, if I put multiple six figures in and somebody cash out because they got bills to pay, that's great. I don't need the money today. And I get my T-share, so when I do need it or when I want to deploy it, then it's there for me. So just that's amazing. That's what Richard, I like his analogy about like the housing market, how like not everybody's buying or selling houses at the same time. It's the same thing. It's the same thing. And then we have the decentralization. Keep your keys. You do everything off your own phone, and you chill. Like you don't have to go beg somebody for your own money and shit like that. So that's amazing, man.
I like
that's all we need.
I like that my fuck you money is basically slave at 100% work effort 7 days a week.
We're trying, Richard. We're trying to take off some of the load. So,
It's like, but I had a couple hours sleep, and then I have an alarm set to have a call with the developer. It's like, 2 delicious hours of sleep.
I hear you. I'm about 4
It
hours.
is an expensive hobby.
Since those encapsulated stakes are going to be like technically layered on top of each other, right?
Well, I mean, there's just 2 layers, right? There's HEX, and then there's the chain where you want to trade shares in a HEX stake. That's it.
Okay, so is it technically a wrap?
Depends on how they implement it. So you could do it with counterparty risk, like wrap Bitcoin, where there's a counterparty that could just be like, sure, we'll wrap or unwrap your shit, or maybe we won't. Good luck. Or you could do it with atomic swaps, and if you do the atomic swap route, then it's trustless. If you do it the wrap Bitcoin route, it's not. But they both work.
I'm just wondering if I can. I know it's kind of a meme, but it'd be funny to like wrap a stake with an NFT on top of it, so when you went and like punched in somebody's public address, you could see like the meme.
I support that. I think that wrapping stakes, if you're going to have wrap stakes, you might as well duct tape on procedurally generated NFTs to them and take free yield from dumbasses that buy.
It's the exact same thing I was thinking.
Yeah, like, go ahead. I think that's a great idea. NFTs are great for selling, horrible for buying. If some dumb motherfucker is going to overpay for a JPEG, it's like, all right, is that what you want? You want an overpriced JPEG? Fine, have it.
Sure.
I just tell people not to buy.
Faster with fun with it. Yeah. Yeah, you see, that's an example of what I call like a win-lose situation. You do that long enough, then people get pissed, and then you get a bad reputation, and then might get called scam. So just say be careful with that.
What do you think of Vitalik's latest blog post where he's supporting NFTs and talking a bunch of nonsense?
That completely pissed me off about the whole Maker shit. Like, I almost lost my mind reading it. I was like, how does he support Maker knowing that, like, the code is just garbage? I lost so much ETH on that Black Thursday, and I was, like, on my computer slamming the fucking trying to get my ETH out of there. Like the vol got liquidated, everything got liquidated. I didn't get the 13% that the contract says I get. It's a big class action lawsuit against them now.
Damn.
Are we talking about the one that he just posted that Richard sent out? The most important scarce resource is legitimacy?
Well, at the bottom of it, he was talking about, like, how DAI and Maker doesn't have, like, I don't know, he said something about, like, the potential's not there. Like, there's not enough people using it.
Oh, that's nice. I mean, there's not enough people using any crypto. Like, I mean, see how many people are using a video game compared to crypto? Like, crypto has way less adoption than any casual video game.
Yep, that's what we saw early, you know. But I think to answer your question, what Vitalik doesn't understand is, doesn't understand the business part of it. Because you can have a great idea, this and that, but if people say life savings, they're gonna get pissed. And you only get one shot at that. That's when business will say sometimes you only got one first impression.
Vitalik founded a coin that went down 95% after it was on the market. I founded a coin that never went down 95% after it was on the market. So if you look at the next price chart, there ain't no 95% drops. We look at the ETH price chart.
And it was a finished product. Let's not forget that. It was a finished product.
I launched a project that was totally complete, and he launched some vaporware shit with the SEC security. I like it. I like the shit it does.
Toby, turn on talk.
So Vitalik's article, he says at the bottom, one of his ideas is that some institution could, quote, bless NFTs in exchange for guarantee that some portion of the revenues go towards a charitable cause. At the beginning of the article, he's talking about how the Ethereum Foundation doesn't get as much funding as they need, and compared to like how expensive it is to mine ETH or to like pay for transactions and stuff. So I just thought it was interesting that he was taking that stance that it would be okay to pick winners and losers and to bless NFTs like that. I'm just curious what you think about that.
I just skimmed this shit. I didn't actually read that. I didn't read that part. The concept that that development is underfunded is 100% true. Miners are way overpaid and developers are way underpaid. So, like that's true. But I didn't read. I just skimmed his article. I didn't actually read every bit of it.
Richard, who was the one that decided to increase the gas fees for ETH? I mean, was this voted on?
It was a pull request by Vitalik and another guy named Martin Swenson or some shit.
And so the miners are like, yeah, sure. Awesome.
Well, the miners don't give a fuck. I mean, the miners are just...
they only care about getting paid.
Yeah, look, that's all this is going to do is drive up the gas usage. So if you now increase the cost to run shit, it increases the total gas, it increases the total cost, it pays the miners more. So in effect, they actually just got a pay raise, which is...
Exactly. This is what I thought it was. My business mind. That's a racket because they're like, oh, we need to pay those people because once we go to proof of stake, and then we're gonna quote 100x the transaction throughput, whatever, and they're gonna get paid less. That's still what a counterpart that with the SLO to say, hey, we're taking your pay, but we're giving you this. It's bullshit.
He's also trying to get EIP 1559 in, which slaughters their pay. So
exactly. That was like, hey, here's your little handout for the. Yeah.
I think
how much of the network? How much of the network actually uses the SLO? That's like
anyone that wants to read or write from disk. It's a common computing feature.
I mean, like who does the most of that?
No, I get the joke because there's a lot of fake DeFi out there. That's why they don't use it, because it's all just like one or two computer and hey, we're DeFi, but they're not. See, but HEX is real decentralized. That's why we have to use it. And that's kind of the joke.
If you want to do anything interesting, then you might want to do it over a longer time frame. If you want to look at the history of a thing over a longer time frame, you have to pull the history, you have to load it. So when someone ends their stake, they have to do an addition for every day that they have their stake open. So because of that, you end up with a bunch of loading from disk because this person had something interesting going on for a long time, and they have to look at that history to total up a result. But some dumbass thing that doesn't care about history, it's just like, let's say an ERC20 transfer. So I used to have this much of a thing. Okay, now write my new balance. Change this guy's to go up and change mine to go down. That's what we call sending. Okay, so he reads and writes twice. He updates one guy's shit and then updates his shit. So he has like a normal ERC20 send is just going to update 2 data fields. But like, not like this is rough, like it may update more, but I'm just saying it's at least 2. But in HEX, you're like, are you ending a 100-day stake? All right, you got to read 100 times from disk, and then write your new total you're going to pay yourself at the end. So you end up with like 100 times the computing for 100 times the interestingness. And so there's just anything that looks over a longer time frame has to read the data from those time frames, period. It's just like reading a book. You want to read a book, your eyes have to move from one part of the book all the way to the end and cover every line, and that's what is interesting. You want to look at the book's cover, you can do that with one look, or 400 times less looking.
Like this, if you wanted to do a science report, you can go see all the contracts that are calling S-load and divide them up by their expense. But personally, I'd rather just bookie than dick around exactly figuring out the specific color of dick how many veins.
Yeah, no, I was just wondering because I'll bet you at least for the next year or two, or for the next year or two, HEX would be number 1.
No,
it's just
the majority.
I don't think so.
The majority of Ethereum transactions are Uniswap and Tether. It's like 30% of all transactions.
And that uses the S function?
Doesn't matter. It doesn't.
Isn't the S thing just compiling technically?
No, but remember that the gas price is also related to the transaction in the network, right? Because it's like going to the club. So because there's a lot of people transacting, that's why the price goes up. If less people transact and then the price goes way lower, we won't be so worried about the S load. The problem is because it's already congested, that's why we're getting this bullshit, because Hexicans primarily, we're stakers, we're not traders. But obviously, Richard being a visionary, which makes sense, we're going to continue to grow and onboard more people, which means we can't just be dealing with this bullshit over and over because it's a forever ending problem. Right? Club gets popular. Okay, clubs gets bigger. There's 5 floor. Well, guess what? You go to Hackathon in Vegas, they feed fucking 10,000 people in, and there's still more people trying to get in. So after a while, you got to be like, well, if we're truly going to be successful, which I believe we will, then eventually we need to have our own thing. It just sucks that we have to rush because now we're getting screwed to some of the onboarding because the little guy is getting crushed.
It's like, let me put it this way. To run a node requires a certain level of computing hardware. Your hardware has finite abilities. It has processing, network connectivity, and reading and writing from disk, and that's it. These people that have synced up nodes are not maxing out their bandwidth, and they're not maxing out their CPU, but they are maxing out their disks. So here's your options. You can either have more expensive reading and writing from disk, which makes it easier for people to be able to run nodes because that's the current choke point for those guys. Or you'll just have people stop being nodes because their machine can't keep up.
Wasn't sharding technically supposed to fix that?
Yeah, but they don't have that, so.
I know. So, I'm just saying.
I mean, everybody upgrading to NVMe drives that are from not Lenovo, but Intel. So upgrading Intel PCIe 950 drives that have 4 times the 4K read-write that Samsung SSDs have, which are optimized for sequential instead of random. Are more optimized for larger block sizes instead of 128 kilobyte sizes instead of 4 kilobyte. That would increase everybody's throughput on the network from the data perspective by 4x by upgrading their hardware. So instead of upgrading the nodes hardware, which they could do, they could just instead of like, so what they're doing is they're fucking over all the users to pay the miners more to try and reduce storage load. But they could also have just not fucked over the users to not pay the miners more and just put on some new servers online with better read-write storage capacity. And then you'd be fine. So it's just not a good way. You're not going to ever scale your network by making your users pay more. That doesn't work. Your network scales with scale. It doesn't scale with making users pay more. So
exactly. Because you're rate limiting the growth, because you're always going to price down. Some people are going to be like, yeah, I ain't paying for that. It's too expensive.
Well, yeah. I mean, do you want it to cost $200 to end a HEX stake? I don't. So
exactly,
like, that's that. Now, look, maybe bear market solves this, but bear market's not guaranteed.
Yeah. Maybe their way of trying to do this new proof of stake is kind of like
to another chain that's existing and temporarily until the new chain.
I think like a 15-year stake would still cost a shit ton of fees because it's like gas fee on top of compiling, right?
No, there's no compiling. You're just talking about gas fee times having to add up a bunch of cells, like linear.
Oh yeah, that's what I meant.
Yeah, sure. So like this technology, the state of blockchain technology in 15 years will look absolutely nothing like today. You will have block sizes that are absolutely massive compared to what is now. You will have hundreds of blockchain. You'll have composable L2. Just like everything's going to be so different that you can't take today's gas price and just say, yeah, that's what it's going to be in 15 years.
Yep. Inter-blockchain communication is going to be a thing.
Yeah, like what should it cost you to add up to do addition 1,500 times on a computer? It shouldn't cost that much, you know. So it's like it's a little bit crazy that it costs what it costs now. I want to do addition 1,500 times to a computer. It's nothing. It's like literally nothing.
Yeah, it's like 2 or 3 blocks, like a couple milliseconds, and.
So for the fork, are you guys leaning towards a layer 2 or like complete like fork network and everything?
It's not layer 2.
No.
Is there a way?
Heading off. Go ahead. I'll answer the last question here. Go ahead, D'Artagnan.
Give her, Maddie.
Is there a way to badge these addition? Oh, sorry. Go ahead.
A few last questions for Maddie.
Go ahead, 007. You throw yours.
Maddie, go.
Is there a way to batch the addition computations between participants?
I think he's traveling. He's got a very rough second.
I mean, no. You're trying to talk about saving gas using the warmed up fields with the EIP 2339 gas price increase bullshit. It would only work for a single caller. So if a single person was ending stake, I mean, I'm assuming that's what you mean. You're talking about on this existing L1?
Yes.
Yeah. It only works for a single caller. So if you were ending a bunch of stakes and those stakes had overlapping days, then you could use the warmed up load for the reduced gas cost. But it doesn't help users on different addresses. And how often is it for a user to end a bunch of stakes at the same time that overlap the same date range? It's extremely rare. So, if not extremely, at least rare, and therefore it's not going to help. It doesn't matter anyway. Like, I'm building a fork at ETH, like, no worries.
Hell yeah.
And also, Maddie, one of the things the system does, which is good for gas efficiency, is every day 8 p.m. you do all this computation and stores it so that in the future the user can just collect the sales. And that's important too. Imagine you have to do everything from start to finish. So this is something HEX does that's very efficient. Because every day 8 p.m. you update the blockchain. So.
D'Artagnan, you had the question?
You can hear me? Okay. So yeah, you always said that you like.
Go ahead.
You said you always wanted to see margin trading here to see traders get wrecked. Suppose if margin trading was here with us, and I was a degenerate trader, which I'm not, where would one go to margin trade, and what would that look like? Where would it be at? And where would you level and compare that with the difficulty of developing that compared to HEX itself or the new Ethereum that you'll like to fork?
I mean, Ethereum fork would be number one. On-ramps would be number two, and margin trading would be number three, in my estimation. But some of those you can run concurrently, you know. They're not blocking. Like, you can do all three of those at the same time if you had enough consciousness to do it.
So would the margin be on Uniswap, for example?
No. I mean, there's places where you can margin swap HEX now, but I don't trust them because they've already rug pulled once. So it's like, and actually, I'm not even sure. Like, I know, I wish it was here, but I can't. It's easy to lose all your money margin trading, and it's also easy to lose money margin trading even if you were in a winning position if you just get rug pulled. So I'm unaware of any reputable place where one could borrow or short HEX or long it even. But like if you're gonna long, like you can. So let's say you wanted to long HEX and you had Ethereum. Well, actually, it doesn't work because they require over collateralization. Yeah, I'm not sure.
The way you long HEX is you just buy HEX and you stake for 15 years and you watch your gains every day. That's it.
There you go. Amen to that. Amen to that. And thank you so
and
much.
You remove liquidity. You're welcome, bro.
Yeah, asymmetrical liquidity is great. If you have no sells and you have bids, it's nice for the price.
Richard,
that is what HEX has. When I look at the on-chain, I see a lot of bids and I don't see a lot of asks.
Richard, I wanted to ask a question. So basically, let's say a whale like Warren Buffett comes in and he buys like $5 million worth in one buy order. Would he have to add $5 million worth of liquidity as well to stabilize the price and basically protect his trade?
Well, the funny thing is that automatically happens by default. That's how automated market makers work. When you purchase from an automated market maker, your money sits there as bid support, which is unlike any other system. So the thing you just described is exactly what you get if you just make a market buy on Uniswap. Your money sits there and acts as bid support for the next guy to sell into. So, I mean, since the majority of liquidity at the price range that we're at now is automated market liquidity, then, like, yeah, his market buy would just sit there as bid support.
And by the way, that's exactly what the Godwell did when he came in and why the price never went back down. And that's the blessing that we have, at least now with Uniswap, because you don't deal with those bullshit spoofing and this and all this other garbage that exchanges do all the time. And then basically
it's
rock
gonna be different. Like Uniswap V3 now, since it allows limit orders, lets you reintroduce some of those things. Like it's probably spoofing, not so much, because someone could just fill your bid before you could pull it. But like, you're going to have more traditional exchange tactics once Uniswap has more traditional exchange features like limit orders and changing shape of the curve by which you present your liquidity. So you can approximate any market maker strategy using the new Uniswap V3 system. It could be horrible on gas. Like the mini game of managing your LP shape could really fuck gas even harder. But they've also said that they're going to get it running on a layer 2, so maybe that offloads a lot of the gas horror.
Hey Richard, I had a question regarding the wrap T shares. If before, if I had $1 million to put into HEX, or now, I would have to go into the market and purchase HEX directly. But with the introduction of wrapped T-shares, doesn't that take away a bit from the pumpamental? Because now I can go and just buy the wrapped T-shares. I don't have to go into the market pushing up the price.
I thought it would, but my opinion changed on it. And
okay.
So what does Grayscale do? Grayscale wraps Bitcoin. How? They wrap it in a company instead of like a chain. And do they ever sell? No. Why? Because there's no right of redemption. If you buy shares in Grayscale, you can't ask for your coins. You don't have any coins. You just have shares in their company. So they got billions of dollars in, and they bought 3% of the Bitcoin supply with it. And have they ever sold any Bitcoin? No. And what did that do to the Bitcoin price? Pumped it like a motherfucker. Why? Because they only buy and never sell. What more could you want? Could you possibly have a better user behavior than just buying and never selling? Nope. So in HEX, if a wrapped stake acts like Grayscale and it onboards new users that buy and never sell, you can't really ask for more than that. Now, and then in this analogy, you say, yeah, but they can buy and sell the shares. And you're like, yeah, but if they buy the shares and create a premium, then people will buy the underlying to cancel the premium out. And then the underlying gets bought, which is what
exactly.
And so, like, good.
And the secret is to settle everything in HEX. That's how we make sure the fundamentals are great. Because you're talking about buying the share. Well, guess what? You have to go buy the T-share after you have bought the HEX. Because I thought about that too, and that's how you close the loop. So let's say it's $17,200 per T-share. You want to go to that facility. Well, bring your HEX, because everything is in HEX. This is one of the good things why BitMEX got popular, because they were doing everything in Bitcoin. They don't take your fucking fiat. So you have to go buy the underlying. Then you show up to the Grayscale facility, so to speak, the HEX scale, whatever, and then you get in, you buy your T-share using HEX, you get your interest, everything in HEX, so that way you always create a positive feed loop. That's how you avoid dealing with fiat.
And the other thing is, like, there are parameters you could change that could maybe make it suck. Maybe if you didn't have longer stakes, or if you had a right to redeem. I mean, so my statement is, like, my confidence that it's a good idea increases as the stake length goes up. So if the metric of buying and never selling is there, or if the stake length is really long, then I think the game theory is great. If the game theory gets to, like, really short, then I'd have to reevaluate it, and I'm less confident that wrap stakes add value if the average stake lengths are very short.
Yeah, I just think that they're going to trade kind of like bonds, how institutions now... I mean, institutions will like it because they can get in and out, just like how they do with 15 and 30-year treasuries. I'm just not sure. I don't think
it's like the 51% attack. Okay, you want to try and, like, fuck the system up? Cool. You have to buy first. You want to make money on a 51% attack? Cool. You got to buy first, unless you get short, which, you know. So, like, I just in HEX, I don't think that as a person that's, like, buying encapsulated stakes, that you can really do anything to, like, fuck the system up. Because if anything, like, when you have a store and you have a return policy and you accept credit cards, it lets people spend money they don't have and buy shit that they might not otherwise because they'd be afraid they couldn't return it. It increases their average expenditure. And if you have tradable stakes where you're not locked in for 15 years, you might be willing to allocate more capital because it's not locked for 15 years. And so it might increase the average amount of money invested. And it will, to the layer one, increase the average stake length. Because since you're trading shares of everything anyway, why shouldn't they be 15-year shares? Why should they be 1-year shares? So, like, I think encapsulated stakes will raise average user spend and average stake length. Yep. And you can't really go wrong with that. Like, that's the game, right? Like, getting more more money in and locking for longer. And the only reason that I made this, like, discovery in my brain is when I finally figured out how Grayscale worked. And you're like, they just buy and they never sell? Really? Wow, didn't know that. That's way cooler than I thought.
Basically a diary.
HEX is Grayscale on the blockchain.
Facts.
All right, guys. It's been awesome. Enjoy your fucking your mad gains.
Thank you, Richard.
1.4 cents.
Hey, plus. Thank you so much, Richard. Thanks.
My pleasure, guys.
Richard, you're a G. Always.
I really appreciate it, man.
Hey, my pleasure, man. Later, y'all.
HEX. That is all.
So if anybody wants to check out Hex Therapy Live, I'm going live now to talk about Hexakin.Vegas meetup and how to not lose all your money gambling and more.
Disencapsulate